Hi, this is Shirley Liu. I am your host for today's show, Focus in Finance. And you know what? I'm so exciting. When December passed came, a lot of folks left work, especially if you're in the Washington, D.C. area where you're working for federal government and you got laid off, or you took early packages, or they're giving you all these wonderful things and you say, you know what? Hey, what the heck? I'm just going to go ahead and do it. And, that talks about basically brings me to the next subject I want to talk to you about today. Retirement account, your 401k, your IRA, they call it TSP, Thrift Savings Plan. If you got 457, which is more likely police officer or sheriff, 403B for teachers, which could be exciting stuff that I'm going to be doing 2026, working with all the teachers about their 403B as well. So what happens to all these accounts? And right now, to be honest with you, there are so much stuff right now. There's a lot of uncertainty going on. And people are asking me, wow, is it going to make money, Shirley? Is it going to lose money? Or what is it going to do? I tell you what, if I had a crystal ball, like you and I, we could make a ton of money together. Okay, if we only had a crystal ball. Is there a guarantee? I tell you what, there's these two guarantees I can give you. I can guarantee with you what I'm about to share with you is that I guarantee with you when the market makes money, you're going to make good money with the market. I can also give you a guarantee if the market loses money, you won't lose a dime. How's that for some of these accounts that I'm about to talk to you today? I know some of you guys say it's too good to be true. No, it does exist, and don't let anyone tell you otherwise. I wouldn't be on television, especially national television in some cases, talking about things that don't exist, okay? Just because you haven't heard of it, it doesn't mean it doesn't exist. Remember that. Let me repeat that. Just because you haven't heard of it, it doesn't mean it doesn't exist. By the way, whatever investment stuff that you do, make sure you have regulator and things backing it up. Make sure you have a documentation that say, okay, what happened if a company go down under? What happened if they lose my money? What happened? All these things are so important that you need to understand and have that backup as precaution. Okay, so let's talk about how you can't lose money, how you can always make money. It's pretty cool. I always tell folks, it's kind of like me taking you to a gambling casino and play all day long and you don't lose a hand. Well, are you ready for this? I'm about to share that with you right now. So let's talk about what I've been doing since December and whenever people get so laid off. Well, the first thing when people get laid off is 3 things can happen to them, right? Laid off or quit or retire, they need money. I know that's number 1 thing. Number 2, they have to say, you know what, I have to make sure where is that money coming from every single month so I can make sure I have money. The third thing I think people like to do is they like to what's called liquidate the account. They like to start going in and start subtracting the money out of the account. Withdraw, they call it, right? Well, here's the problem with the withdrawal. If you keep doing it, you can run out of money. Believe me, you don't want yourself to be in that position. Okay? So, what do? Ready? Hope you have pen and paper. So what I normally do is, depends on the client age and where they are, what state they live in. The first thing I do is that, okay, let's say we take your 401k. You just retire. The first question is that, how soon do you need the money? Some may say, well, I need it right away. If you need it right away, then we create a thing called guaranteed income. If you said, I don't need it quite yet, but maybe in a couple years, 4 or 5 years, then we design a plan maybe in a couple years where you can actually get the money in a couple years. If you say to me, no, I need the money like now, okay, like tomorrow, within 30 days, then we design a plan that gives you an income within 30 days immediately. And by the way, this income will last you from now until 115 years old, right? Because I think it's important to understand that if you don't do anything differently, whereas you just go and do a withdrawal, you're going to deplete all your money. You don't want that. You want to have an account that has income stream. So let's talk a little bit about IRA account an annuity, if that's okay. So if someone has a 401k where they're looking at, hey, you know what, Shirley, I'm just looking for growth, like earlier where I had mentioned where someone said, I don't need the money, I can play with it. Well, in that case, you would move it into an IRA, okay, an IRA account. An IRA account is an individual retirement account where you, no tax consequences. If you're taking, let's say you got $500,000 in a 401k, you move that $500,000 over to an IRA. And by the way, there are no tax consequences because we're keeping it as the same qualified plan. We are keeping it as the same qualified plan. I have so many people that always say to me, oh, I have to pay taxes on that now. No, you don't. You only pay taxes on it when you take the money out in the future. Just like a 401k, the day that you take that money out, that's the day you have to pay taxes. In the IRA account, you don't pay taxes until the day you take it out. Now, there is a way you can make that tax-free by converting to a Roth. But there's a system and there's a process that how you can take your 401k and convert it into a Roth, okay? So that money down the road could be tax-free. I'll give you an example. There's a client said, okay, I want you to try to make as much money as I can on my account while I grow tax-deferred compounded interest, and down the road, my $500,000, it grew to be $1 million tax-free. Well, guess what? That could happen. Absolutely. But you have to have patience. You have to wait for at least 5 years for it to materialize, for that to happen, okay? So you have to convert that into a Roth account. You can pay lump sum one time because the IRS are always going to want their money, okay, guys? So if you do a Roth conversion in that case, where I take a 401k and do, let's say $500,000 to Roth conversion, you pay the IRS the taxes now. However, some people say, well, I don't have the kind of money to pay all that taxes now. That's why you would do Roth conversion slowly. Maybe I'll do the first $100,000 year one, $100,000 next year, $100,000 third year. Remember, in order for it to be tax-free, the Roth conversion requires minimum 5 years starting point. That means if I start a conversion today, it'll be 5 years from then before I can get that money tax-free. And it's so important that people need to understand that and not assume that, oh, I can take that money out right away, okay? So that's one thing, you know, on the Roth, you can wait 5 years. But let's talk about the income account. So your 401k, if you want income, I would move you into some kind of account called income. It's a promise of guaranteed payment. Now, there's so many companies out there offer income guarantee today. Some of them can give you guaranteed 4%, 6%, 8%, 10% even. It's amazing what's happening out there on the interest rate that's earning on your income account value. Whenever you get an income guarantee from investment firm or insurance company, any of that, that is called an annuity, okay? Because people always say, well, is an IRA and annuity one and the same? It depends. If you're converting it into, you know, stream of income, more likely you're doing an annuity. If you're just letting your money grow, then they call that an IRA, okay? Because that's called the growth phase, you know, where it grows tax deferred and compounded interest, okay? So, and technically in some cases, there's a gray area in between where the IRA could become an annuity. What I mean by that is that, okay, you know, we have Carlos here where we get him money in, move his money over, we let it grow, and it's an IRA, and then he goes down the road, he says, okay, it's time, I want my money. But rather than we're doing withdrawal, using all of his money, well, we say, hey, Carlos, let's do this. Let's do a better deal. We'll take that IRA account, convert it into an income account, then that becomes an annuity, right? So you see how that kind of somewhat the same plays in the same factor on that. So it's pretty neat. I know people always get confused on that, so I just want to clarify what the difference between IRA and annuity is. Look, the more you know is the better knowledge you get. So in this case, my client is getting a guaranteed stream of income that they're going to be able to have to live. And you know what I love about this? These accounts don't have the kind of crazy restriction like people always kind of say. Here's the connotation. Oh, there's fees. Well, no, not necessarily. There's a lot of accounts that are giving you bonus on the money. They could give you 14% bonus, 21% bonus, 5% bonus. Are you kidding me? All these bonus that you can have. So that's one thing. Company giving you bonus. Fees, no. There are accounts that are no fees. Let me repeat. There are accounts out there that has no fees that can still grow with the market. Don't let them tell you otherwise. The only time there are the fees is if you wanted some extra feature. For example, if I wanted, okay, I want a guarantee rate of 10%, on my income account, then I pay a fee of 1.5. Gives me a guarantee of compounded interest, or it could be simple interest growing on my account. And their fully disclosed tells you if that's what you want. And if you want no fee, fine. Then you go with other rates. There are no fees. And you know what I love about these accounts? If you're getting a stream of income, let's say Carlos, I set him up for a stream of income. He's getting $40,000 a year. He's loving it. But then somewhere down the road, he gets sick on me. If he gets sick on me, he can't perform to the 6 activity daily living. We changed the payment from $40,000 to $80,000. Now, Carlos could get that $80,000 a year, if there's still money back in the account. Guys, I love these kind of things. I could sit here and talk to you all day long about it. But it's about what you know, and understand your money's important to you. Have someone take a look at it. Look, I'd be happy to have a candid conversation with you and my associates as well. Shirley, Lou, and Associates. Feel free to Google Shirley Lou, L-U-U. And my can we reach number is 703-608-1203. Because, we would love to help you, for your future, for your family, and protection, retirement, everything else you can possibly think of. We're here to help. And in life, I've always said, every time I ended the shows, we rise by uplifting others.